let's try to look at the screen and see what is happening on this screen and try to identify what we are seeing. If you look at the top left corner of the screen, you will see BTC USD. This is a pair of trading Bitcoin against the United States dollar. So in trading, whenever price is moving up, it means it is buying. And the first currency there is what you are buying. So if you are buying Bitcoin, it means you are selling, automatically selling USD. So the way it is now on your screen means that we are buying the Bitcoin because we believe Bitcoin is going to rise in value. How do you know that it's going to rise in value? That's why I said you need the moving averages and you need these other indicators. How do you make them appear on your screen? What you need to do, I will send another screen record where it will show you how to set up your screen to look like this, and from there we can get moving. But today I would like to analyze to show you how to look for entry using this particular strategy. If you have popped up all your indicators on the screen, next you go to the monthly, that is the highest time frame you have in your MetaTrader 4. You go there and then you check and see what are the indicators telling you. If you look at the monthly BTC USD chart we have here, we can see that the blue indicator is above the red indicator, and from the setting you will see that the red one is the 21 period moving average, and that means it monitors every 21 candles on this chart. Take the average price of those prices and then displays them on the screen in form of this smooth line so that we can make decisions based on how the lines are reacting relative to price. Then you will see above it there is a blue one, and that is the 9 period moving average. You know the 21 period is heavier than the 9. So whenever you see 9 above 21, and you can see where they crossed, here. This is where they crossed. So it means price has been trending up right from when they crossed. Okay, they crossed here, and you can see since then price has been trending upwards. Even here, price started retracing backward, but once it came close to this red indicator here, it still went back up and continued trading up. So the strategy is that after you look for entry, you continue remaining in that trade until this blue line crosses downwards and the red line is now up. What do I mean by that? If you go backward a little, you can see here there was a time when the blue line is under the red line. It means this is a downtrend. You can see price was falling until it came back. Even after it started rising, the indicators have not yet crossed, so you shouldn't buy anything. Don't do anything. Keep observing until you see this cross happens. If you see this cross happen, then that means a trading opportunity is presenting itself. But that's not all. Then you pay attention to what your OBV and MFI indicators are doing. You can see just right there when the crossing happened. If you trace it down, exactly this line that I'm moving right now is called the crosshair. If you move your crosshair right from where the price crossed, you will see that price has already been trending upward. But look at it backward. When price was actually falling here, it was about to make a bottom here, but it had not yet make this V shape yet, but price was already falling. Look at it on the topmost chart where you have the actual chart there. You can see price is not yet rising, and here it's about to make a bottom. But in the last one, price was already rising. Price was already rising. This is called what we call divergence. Price is falling, but the indicator is showing is already rising. So until you may not need to enter until you wait for this confirmation where you have price crossing. These indicators, these two moving averages are crossing each other, the lighter one above the heavier one, and then you can begin to think of making your decision. But with time, you will see that the moment you see your OBV indicator bottoms like this V shape, it is bottoming like this, and your MFI is also showing sign that it is rising. You can see it. You can see this very bottom here. You can see the bottom here is lower than this bottom up here. That means price has made a higher low, and it means it's about to start going up, and that means you already know that you want to buy. Since you know you want to buy, you just move to your weekly chart, which contains each candle representing a week of trading. Here, each candle shows that trading has been going on for 5 days a week, and it starts at a certain point and closes at a certain point. So you need to come and see what these same indicators are showing you. On the weekly, we can still see a cross. There is a fresh cross here of our indicators. The blue one is above the red one, but not yet stacking. They are not stacking, like they are not really stacking and showing an uptrend. Well, we can see here the same place where they crossed. We can see the same place where they crossed. We can see our OBV indicator is also reacting, but not the same way with what the price is doing. So we can see it's already rising. You can see it was rising here already. Let's look at where it bottomed. Look at where it bottomed. There is a sharp decline in price, and then the price bottomed on the OBV indicator. But look at MFI. MFI is not showing any bottom. It still shows that there is a downtrend, that the price is weighing downwards instead of going up. But the overall trend is what? Is pointing up right from the monthly. Then drop down to your daily, where we have each candle representing a day's trading. Each candle is representing a day's trading. And here, what can we see? Let's still look at our indicators. Indicator here is showing us that price moved sharply up here, and then our indicators also crossed. Look at it. Before the price indicator crossed, our OBV indicator had already bottomed. So when it came here, it formed another higher low here. So this is a low, but this is a higher low than this one. So, but even on our MFI indicator, we can see now that we have the same bottom, but a bit smoother than this one. This curve is sharper. It's just telling you that OBV reacts sharper to price than MFI indicator, but each one takes into consideration different factors, and this is why we need them both on our screen. We need them to be aligned so that we can be sure of what we are doing. By now, from the monthly to the daily, I already know I want to buy. But you now that is looking into the screen for the first time, you need to know that when the lighter indicator is above the heavier indicator, it indicates that price is also going up now. And if it is vice versa, then price is falling down, and then in that case, no need of buying. You only look for what? Selling opportunities. If you stick to this plan, then you will lose less money and gain more from the market. So let's move down to our 4 hourly time frame, and this is where we need to look for our entry based on this strategy. Look at daily again. Daily is showing us that there is a cross happening already, and you can see after that retracement, price started moving up sharply, but we don't want to take our trade on daily time frame. We want to come down to 4 hourly. So on 4 hourly, just when price was falling, price showed us it was falling down here. We need to wait for it to fall to this red indicator, that is the 21 moving average. Let the price move towards it and even break it a bit if possible. Don't buy yet until price touches the red one or falls below it. Sometimes it may just come close to it but may not touch it. You have to wait for confirmation before you take any trade, so that you will end up protecting your capital, which is also second to knowledge. Know what you are doing in this market. Second, protect your capital always. Do not over leverage. Do not take large positions when your money is small, because you may end up blowing your account. Now, I will leave you to understand leveraging on your own. You can go and read how leveraging affects your trading, and how you need to, the lot sizes that you need to open. We are going to touch them, but not deeply. You just need to know, for instance, if you have $10, you need to know how much position you need to open with that $10, because if you open more positions than your capital can carry, then you end up doing harm to your capital, which we want to avoid by all means. We are here to make money, not to lose it. So we can see that it was here that price traded up to the red one, here. That's when it first traded to the red moving average. It even broke it a little. You can see it has pierced the red indicator a bit, then started trading backward. The moment you see this happen, then you can open your position. If this price goes back and closes above the red indicator, just open your position and place your stop loss at the end of this red indicator. I hope you are getting me. So if I will just place a red line so to show you what I mean. This place here, you can see this is where, when price was moving up from here, at here it started to move downwards until it touched this red indicator, where this red horizontal line is showing. Then price started moving up. I am saying, after coming from your monthly time frame to your weekly to daily, you are looking for entry on your 4 hourly. You have to wait for retracement. Retracement must come to your 21-day moving average, and it's happening here already. So it means we are seeing an entry. The moment you see price close above this red indicator, the next thing, open your position and place your stop loss below it, below this, or just below the 21-day moving average. Depends on how you want to do it. But if you put your stop loss too close, then any news may take you out of the market, which you want to avoid. So just place it at a good position, and I suggest you place it either below the red moving average or just below the last, that is the lowest price of that same candle you are looking at, where you want to take your entry at. So as it is now, you can see price went price actually went there. um we have taken our trade. You can see I even have a live trade open. So I have taken an entry there, and since then it traded like this, then started to move backwards. Started to move backwards as if it will break this, but you can see it never came here. It never came to where I placed my stop loss, and the next thing, we had a sharp move upward, and we are already in profit. This is your trade. The trade is here, where you see these green dashed lines. They are the trade. That's the point of entry. Sometimes your broker opens the spread, and you see that you are not in profit in time because you are still paying your broker. But if you have a good broker, you see once you open a trade, it's just little spread that you have to pay for, then you start entering profit. If you're entering the market, be prepared of what you see. This is why we say manage your risk. But for this strategy, if you follow it like this, by God's grace, you are going to minimize profit and minimize loss and maximize profit. So we can see as I've entered this trade is moving up in my favor and I'm buying already. So I'm in this trade. I will continue remaining in this trade once what? You take a decision. Once this red indicator is above the blue indicator is above the red indicator, I will continue being in this trade and I will not leave this trade until the red indicator goes back up and the blue indicator is down. Then I'll exit my trade. And you can see price is moving sharply upwards. The same thing with OBV pointing upward. You can see the MFI is just trying to point upward. It's just getting ready. So it's like a new trend. So we are going to monitor this as we continue. See you in the next class.